Hi, I'm Matthew Malcolm with California Dairy Magazine, reporting to you from the World Ag Expo in Tulare. During this three-day event, nearly 100,000 people were in attendance from all over the world. Over the years, the global market demand for dairy products has increased significantly. Tim Hunt, a global dairy strategist, explained the current changes taking place in the international dairy market.
And in China, and this is a really important point, milk prices, which have been high for some time, have jacked up enormously in the back half of last year, and they're now being paid around 69 US cents per litre, or almost 35 US dollars per hundredweight. That's an average milk price. If you want something coming from a quality farm where you can guarantee it's safe, add 10 to 15% on that.
At the moment, California dairymen are starting to benefit from the exceptionally high prices that we see on the international marketplace. And that has a lot to do with what's going on in China. China's been in a dairy industry where we've seen consumption show very strong rates of growth, but at the moment it's more of a production story. Chinese milk production stunningly fell around 6% last year. They've seen a wave of foot and mouth disease and bad weather add to problems that they have with high costs of production. And with milk production falling by around 6% last year, they've come to the international market to top up. They increased purchases from international sellers by about 42% last year, which is more or less like China coming to the world market and saying, this year, on top of our purchases last year, we'd like to buy all of Ohio's milk production and Nevada's as well. So that's significantly tightened the world marketplace, particularly at a time where export supply has remained relatively stagnant as we come off the back of weak production seasons for most of the last 12 months. So at the moment, Chinese buying is really squeezing the international marketplace and keeping prices exceptionally high. As we move forward, we do expect some easing of pricing. Chinese buying will remain strong, but we'll have more product available as inevitably the high commodity prices feed their way through to very high prices at producer level, and producers start to respond to that. But we don't expect market prices to crash this year. We do have a number of constraints on the ability to expand milk production growth in the coming 12 months, not the least in the US, where we see more producers this year putting money into buying ground to grow more of their feed rather than necessarily expanding their dairy production units, or looking to rebuild equity off the back of a couple of tough years. So a 12 months in which we'll see more production growth in export regions, more available for export, China soaking up a lot of that, but a bit more to go around and increase supply to markets like Southeast Asia and North Africa that have more or less been on forced diets for the last 12 months. That should ease the need to ration pricing, but not leading to a price collapse. So we see the outlook for some softening of prices, particularly through the middle of the year, but remaining firm for California producers for what, at least in market terms, if not weather terms, should be a good production year.
Thank you, Tim. Well, it looks like a stable market for the California dairy industry ahead, with an increased profitability for the export market. Read the full report in the coming issue of California Dairy Magazine. I'm Matthew, CaliforniaAgNet.com.